Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes to get started here, going live on all the different platforms. We are streaming live on YouTube, Facebook, Instagram, and LinkedIn. So give us a second to go live on all the different platforms. In the meantime, we put up the chat on the screen, so feel free to drop comments. I see some people are already dropping comments there. So feel free to drop a comment in the chat as you tune in while we get live on all the different platforms. Definitely an interesting topic to be going over today, something very unique, which we'll do a deep dive into here after we go through the live rates. But hang tight with us, give us just a minute to go live on all the different platforms, and then we will get started. Hope everybody's been having a great week since it was the holiday this week. Week's flying by fast. Can't believe it's already Thursday. All right, some people dropping comments in there. Good morning, everyone. Good morning, Africa, Julio. Everybody dropping comments there. Adam, good morning. Good morning to the Mortgage Calculator team tuning in. Yukita, good morning. All right, looks like we are live on all the different platforms, so we can go ahead and get started here this morning. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do every morning on this show is go through the actual live mortgage rates for both conventional FHA and non-QM loans, and then we do a deep dive into a different topic every day. Now, today's deep dive is something we're familiar with here at the Mortgage Calculator, which is going to be our 6-month ARM DSCR loan. Our DSCR loan is one of our favorite products here, debt service coverage ratio with no income verification and no employment verification. So we'll have Jose do a deep dive into that here shortly. But before we do that, what we'll do like we do every morning is go through the actual live mortgage rates today. So Nick, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we'll get started. So as Kyle mentioned, this is our pricing tool that we use every morning. This will show us the general rates and the APR, including all the fees for today. It is July 6th, just after 11 a.m. Eastern. So most of our standard programs have already this morning. If you would like a full loan estimate with a breakdown of all the fees that go into it, please let us know. We can connect you with one of our 300 plus loan officers. We can offer primary and second home loans in 24 states that we're licensed in. And we can do our DSCR, which is the topic for later today, business purpose loans in 44 states. So we will go ahead and start our demo here so we can compare across the programs. All of our demos will use the same scenario setup. So we'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to $99 for all our demos. That means we'll ask the computer to find the best rate at one discount point in cost, which is the typical request these days. And we're going to go through our demos as we do every morning. We'll start with conforming conventional programs. Then we'll check out our FHA programs. And then we'll go into our expanded guidelines, also known as NonQM. We have over 5,000 additional loan programs using alternative income. We don't do the VA or USDA live. We do have access to those programs, no problem. Remember, VA is only for our active service members and eligible veterans that are eligible for the program. So if you are, let us know. We'd be happy to quote it. And for USDA, it's only for properties that are eligible. So those properties must be in a USDA eligible rural area. If you do happen to be shopping in one of those areas, let us know, and we'd be happy to quote it. So to start today, we will do conforming conventional. We'll do purchase, 30-year fixed, primary home, single family, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we'll use an estimated FICO of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's check the conventional rates. Oof. So we see some jump up with the recent news from the Fed. Not looking good for rates here for us, unfortunately. So a little bit of jump from yesterday. Best option today, 7.25 rate for 0.75 discount points. And the APR at 7.408. So remember, yesterday we were just over 7. And a few weeks ago we were just under 7. So a little bit of upward momentum lately. Definitely recommend those out there shopping. Get ready to take action. It looks like the news is not in our favor for the next few cycles here. Now, if our customer doesn't qualify for conventional for any reason, typically the next option that we want to look at in our next demo is always going to be for FHA. FHA does allow a little more leniency on credit items as well as a higher debt to income ratio. However, so we can compare apples to apples and compare APRs exactly across the programs, we will keep everything else exactly the same in our demo here and compare our FHA rates. So as expected, the FHA rates have gone up a little bit along with the conventional. So the best option today, 6.5 rate for 1 discount point in cost. And that's a final APR of just over 7.092. So for the last few weeks, we were definitely well under 7 here for FHA, but they do track with the conventional loan programs here. So remember, APR allows us to compare apples to apples. So in this case, though, for our borrower, if you qualify for both conventional and FHA, this FHA program today is actually quite a bit cheaper. So definitely recommend our customers that qualify for both. Look out for FHA. This APR includes the upfront and yearly mortgage insurance and is still a touch cheaper in this example. And our customers that must use FHA, thankfully, the recent changes do make it more affordable. So great news for FHA there. Now, where we love to come in is if our customer, for any reason, doesn't qualify for either FHA or conventional. That's where the mortgage calculator specializes, where we have over 5,000 additional loan programs under expanded guidelines, also known as non-QM loan programs. So we'll keep everything else exactly the same, but you notice we have a new option for income verification. So full docs, what we use for conventional and FHA, that's 2 years of tax returns, what most people are used to. So we'll typically choose a non-QM program to utilize one of these alternative methods, such as asset-related, business bank statement. We have our DSCR programs for investment properties we'll talk about in a minute. Personal bank statement, 12 months, our most popular program by far for a primary home. So that's what we'll use in our example. We also have RSU, stated, VOE, 1099, P&L, all these different options. For our demo, we always choose the personal bank statement 12-month, and that's going to be for our self-employed borrowers because that's our most common option. And our self-employed borrowers, when they submit 2 years of tax returns, a lot of times they have different write-offs and things that may be going on, and they either don't qualify or don't qualify for quite as much income as they really want for the home they really want. So in this case, these programs solve those problems where we will use, instead of 2 years of tax returns, we simply use their last 12 bank statements. And we determine a debt to income ratio of 40% in this example using their actual cash in the bank, no tax returns involved. And most of our self-employed borrowers will qualify for double or triple the income using these methods and therefore get the home they really want. So these non-QM programs are amazing. Let's check out the options this morning. Oh, we love it. So we love it when the non-QM usually doesn't react as, I would say, aggressively to the news cycles as the conventional and FHA rates do. So here we actually have our non-QM option, 7.375 rate, 0.875 discount points, and a final APR of 7.437, almost identical to conventional here. So amazing options to use non-QM. Not only can we use different income like bank statements, but some of these programs, maybe at a little bit higher rates, may allow things like credit events like foreclosures and bankruptcies and other things like that. So we can get around other items that would put us out of qualification for some of the standard programs. So definitely recommend anybody out there looking for a little bit extra help, especially as the conventional rates are going up, using these alternative methods and very comparable rates here for us. So we love when these programs are almost identical. Please let us know if you need a little extra help. Now, before we go into Jose's example, we always want to do live rates for investment properties. So we'll do our final 2 demos here for occupancy for an investment property. Whether you're a seasoned investor with many properties or a first-time investor, we have some great options. So let's slide this to 80% loan to value, 20% down payment, just like all our other demos. And we're going to compare our options for investment properties. We have our conforming conventional options and our non-QM options. Remember, the government programs are not available for investment properties, so we'll simply compare our 2 options here. We'll start with conforming. Everything else will stay the same as all our demos today. The only thing we've edited here is occupancy to investment. So we'll see here what adjustments the conventional programs have made to investment properties. Whew. And as the rates go up for primaries, so do the investments, and these are getting quite spendy here. Best option the computer found, though, 7.375 rate, so still great rate, but no 1 discount point options. The best discount points the computer found, 4.375 discount points. Pretty spendy there. And a final APR of 7.654, so still a great option there, just a little higher than, obviously, when you do a primary home for the conventional rates. But many of our investors want to have other options. Most investors don't mind going up in rate a little bit as long as they can save discount points. So in this example, $17,500 in discount points can be deployed into another investment for most of our investors. So that's when we love to present our non-QM options, because unfortunately the GSEs for conventional programs have added these adjustments and there are just no options for higher rates and less discount points. So for our final demo, we will solve that problem by using our expanded guidelines, aka non-QM programs. And the first thing we need to set for all of our non-QM programs is our income, most popular option for investment properties, and our topic for today, DSCR. That's because debt service coverage ratio loans stands for debt service coverage ratio. They don't actually require any income or employment. We simply use the estimated rental income from the property in order to determine a debt service coverage ratio. So if the estimated rental income can cover the PITIA of the mortgage we're proposing, that's a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. We even have options for ratios under 1.00, aka the property doesn't quite cash flow on a monthly basis. So a ton of different options. To show all the options, I will set this at 1.5, which is pretty much the highest value. That way we can see all the different programs pop up. And the final thing we set is a prepayment penalty. We always set 3 years for the demo. That's the most common. There are options for 0 that will limit the loan programs, since not all allow that, and it will cost more money. And the same with 5 years. Not all loan programs allow it. When we do allow it, it does save us a little money. Therefore, we always use 3 years for the demo, since that shows the most common option. So with these settings, let's check out the DSCR rates. So the best option here at the top, 8.125 rate for much less discount points here, 0.725 discount points, and a final APR of 8.182. So a little bit higher APR here for a no income, no employment loan, but we've also solved our investors' problem where instead of, I believe it was $17,000 cash in our last example, now we have only $2,900 in expenses here for this. A little bit higher rate, obviously, but these are alternative programs, so that's expected. And the APR is a little bit higher, but very comparable. Not even a half a point higher, really, when you compare the exact APRs, apples to apples, across the programs. No income, no employment, so our investors that have multiple properties can start 1 to a dozen loans at a time to refinance multiple properties and purchase multiple properties. Since no income or employment are needed, these are super flexible loans. And if we scroll down here, there's a ton of different options with different prepayment penalties and different requirements. Some of these may allow short-term rental income. Some of these may allow bankruptcies, foreclosures. Again, when we're doing non-QM, we can get around a lot of the other guidelines that would put us out of reach for the standard programs. So these are amazing options. Definitely recommend to get with our team on checking some of these out. And for today's deep dive, we're going to go into a specific type of DSCR, which, let me pull up my screen here. very special product that we have access to here, very unique, a 6-month ARM DSCR loan. So DSCR loans are already pretty creative. As we've gone over this week, we have different amortization options, such as 40-year amortization. We did that, I believe that was Monday. And then yesterday we did the interest-only options. So a bunch of different add-ons we can add to these DSCR programs in order to improve the DSCR ratio, if that's our goal there, to qualify for a certain program that requires a certain ratio, or lower the payment if the investor's goal is to have as much cash flow on a monthly basis, use the interest-only 40-year amortization options in order to increase their monthly cash flow. All kinds of different add-ons we can do. And this is one of the most unique. So there's only I believe technically one program that allows this, but the 6-month ARM is a very unique twist to the program. So, Jose, if you're ready, you want to talk about it a little bit, and then we'll pull up your examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. In these volatile times for interest rates, we're always looking for different solutions to our investors' needs to have a system with meeting their objectives. Sometimes the objective is short term, and sometimes the objective is long term. So that's where you have to put on your hat, your consultant hat, and you have to try to figure out what it is. What is the objective that is trying to be met, and then offer as many solutions as possible. I mean, as you know, you can't put everything into the same bucket. Which is the key here. So if you do have a scenario where the investor's goal may be shorter term in nature, definitely the ARM is the way to go. You're looking at scenarios that I'm going to show you today where you could have a substantial savings in what they're trying to achieve here. So let me share the first example with you. Now, something also to note is what is, on these ARMs is what is the index, what is the margin. Those are all things that come into play that you're going to have to answer to your investor when considering what they're going to do. Now, the 6-month ARM, which is the one we're looking at today, is precisely a 6-month ARM. It's only fixed for the first 6 months. Then it becomes an adjustable rate, which will then also adjust every 6 months. So it'll be a true ARM from the beginning. It's not a 5-year fixed, which I do have an example on one here, which is a 5-year fixed, which then converts to a 6-month ARM. But the lowest case rates definitely will be the pure 6-month ARM from the get-go. So here, our first example is 20% down DSCR purchase. Now, I will state for this option.
Can you zoom in a touch more there, Jose? It's a little hard to see the text.
Sure.
Yeah, that's better. Thank
you. For this example, it is for a borrower closing in a personal name and not an entity such as an LLC. That is the best ARM option that we have, the best ARM option that's out there. As you can see, look at these rates, right? Very, very enticing. Now, keep in mind, this is what they're at now when we close, but in 6 months, when it does adjust, we would have to look at the index that's being used. We would have to look at the margin, and we would have to see what the fully index rate would be at that time. But for the investor that may be looking for a 1 to 2 year plan on the investment, maybe they'll hold it. Then they figure, hey, I'm either going to cash it out to buy some more, or I'm going to sell it, which is great because this doesn't have a prepayment penalty. So after 1 year, if they want to decide to cash it out, maximize their flow, they could do that, buy a couple more DSCR properties. So here you're looking at 6.75 offering a lender credit of $100, and you can buy it down all the way to 5.25 1.875. So that's
remember the conventional rates this morning are in the sevens, guys. So this is just amazing. This is lower than conventional. So
I saw like a 7.375 and something like that as I glanced over at your rates, and I'm looking at here that doesn't even appear on our rate sheet. So again, when you're discussing the objective of the investor, and the investor is looking for a shorter term rather than a longer term, you would definitely want to look at an arm like this one that just blows the rates out of the water. Imagine if you could do like that 6.25, not that expensive, 6.375, and again, for your DSCR, it's going to help you out as well. So now what I want to do is to put this into perspective, right? Always like to add a little context. Let me show you the 30-year fixed for the same product, same exact conduit here, right? Closing in a personal name, the rate jumps about almost 2%. It jumps 1.875, right?
So that's same product, just 30-year fixed, switching to 6-month ARM. So it's the same DSCR product, the same exact guidelines, everything's the same, just everything. Switching the little add-on basically there.
Yep. So you see here, it goes to 8.625. And then let's do this analysis here. 3111 is your payment there. Same loan amount, and here you're looking at 2594. So that's what 600
and change there. Yeah,
that's every month, right?
For 6 months.
Yeah, well, for 6 months, you're 66, you're $3,700 ahead of the game.
Yeah.
Right there. And then if they're on the 1-year plan, we would hope that their rates wouldn't get too crazy once it starts adjusting. But again, you would look at the margin, you would look at the index, and you could have a good idea of what's going to happen there. But again, you could see the difference, 6.75 to 8.625. Now, the same program with 25% down doesn't really yield any benefit. Actually, your lender credit drops by $6 at the highest rate. So, and the 5.875 is actually 64.69. Yeah, so it does drop a little bit at the lower end of the spectrum there. And our 6-month ARM cash out, right? So we're going to do a little cash out, and you'll see here very good rates. Again, this is the same option, closing in a personal name. You're looking at 7% here as your lowest cost option. You could still buy it down to 5.875, a little bit higher cost. So now I was able to find a 6-month ARM that's a 5-year fixed 6-month ARM, right? So the same 75% cash out. Now here, obviously the rates do go back up to very similar to what they're going to be on a purchase with a regular 30-year fix, which is what we've really been finding with the 5 and 7-year ARMs. There is very little difference in the rate from the ARM to the 30-year fix, which is what you're going to find here. So you're looking at 8.99 with a little bit of a lender credit, and then you can buy it down to 7.99. But that's not really where you're going to find the benefit. If you're really going to go for the ARM and it's a real short-term investment, the pure 6-month ARM is going to yield the greatest benefit. You do not have much of a benefit going with a 5, a 7, or a 3-year fixed ARM that then converts to whatever end product it may be, whether it's a 6-month ARM, whether it's a 1-month ARM, whatever it may be. There's not really that much benefit here. So the 6-month ARM is the way to go if you're really looking to capture that benefit. But Remember, unfortunately, this best case lowest cost option is for borrowers closing in their personal name. That conduit does not allow closing in an entity of any type.
All right, I don't see any questions here. Definitely interesting as we go through this week on the different types of DSCR loans we have. Obviously, we have hundreds of different types, but the fact that we can do interest only, the fact that we can do 40 years, the fact we can do 40-year interest only, the fact we can do 6 months ARMs. I mean, just amazing options out there. So thank you for sharing that, Jose. Remember, everyone, that if you want more info or an actual quote on one of these programs, you can visit us at themortgagecalculator.com. We can pair you up with one of our 340 loan officers. We are licensed in 28 states for primary and secondary homes, and we can do these DSCR loans if they're closing in an entity in 44 states, or if they're closing in a personal name, like those examples Jose did today that have to close in a personal name. We're talking about 24 states that we are licensed to do those in. It does look like we have a question that just came through here. If you want to pull that up, Nick, before we
covered that on yesterday. Yeah, it was yesterday, right? The interest only. But you did one of those examples, correct, Jose?
Yep. The interest only feature is available in the non-QM world. Should be available on all programs, right? So you can go interest only, whether it's primary or whether it's investment. The only restriction that there may be to going interest only on any particular loan could be credit score based. So there may, because since it is considered a little bit of a higher risk factor when you're going interest only, there will probably be some type of a minimum credit score below which you would not be able to select the interest only option.
And remember, DSCR, lowest down we have is 15, and Jose did one of those examples. But if you're talking, bank statement loan, but you want to go interest only, we do have the 10% down for the bank statement primary home interest only type of loan. Remember, DSCR is only for investments.
All right, perfect. Well, keep in mind, we do this show 11 a.m. Eastern every single weekday, so you can tune in to us giving the live rates and then doing a deep dive into a different topic like we did today with the 6-month DSCR ARM. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.